Hello, and welcome back to another tutorial video about the MW Futures Liquidity Scalper and on how you should actually tweak your model and how you should be using the backtester. So in the last video we went over the necessary required settings that you should have in your settings. So just to give a short summary of that, just when you add the script to your chart, these settings will already be by default on the correct settings. But just as a quite recouping summary, never ever use the check mark for calculate on every tick or recalculate on every orders filled, and always try to use the bar magnifier and the on bar close if you are using strategies with entries and exits. So in this video we will go a little bit about how should you tweak your model and how should you actually use the deep backtesting functionality of the strategy tester within TradingView. We will dive a little bit deeper into the deep backtesting strategy option on another video as well. But as a small introduction on how to tweak the settings in the liquidity scalper, we will talk about how you should do that. So by default, when you add this strategy to your chart, right now it is the 16th of February, and you see that the strategy tester right now has performed 5 trades, and that all of these trades were actually losing trades. This is one of those trades. So once you open the strategy tester and you are just all the way to the right, and you open it, you see this chart. What you can do is that you have these few trades that you have, but you see when you hover over them, you are able to actually click on them. And when you click on them, your screen will move towards that particular trade that was being performed. So that is a very useful thing to know on when you actually want to look at the trade that was performed and, hey, should I change anything here? So once you start tweaking your model, the first thing you want to do is go to your overview, see, all right, where am I losing trades? What do they have in common? And how can I potentially fix something in my settings for the liquidity scalper that would actually prevent entering a trade? Or should I modify my stop loss, my enter criteria to make it a winning trade? So once we go to this particular, so the second trade, once we go to this trade, we see that we had an entry on this particular fair value gap at 955, and that we were stopped out over here at 21,772. So a way that we could look at this trade is that, all right, it was a good trade, but we got stopped out before we hit our profit targets over here. So if I would modify this trade to make it a successful trade, instead of putting my stop loss over here, I could have put my stop loss on this particular candle, and then the trade would have been successful, correct? So once we see that, we identify that this particular trade could have been successful, we know that we should look at different stop loss placements or for value gap sizes to make it a successful trade. So once we go into the settings and we have identified that this trade could be a successful trade, once we change the stop loss positioning, we could go into our settings, figure out, all right, our current stop loss placement is placed at the fair value gap candle low or high, meaning that our stop loss would be placed here or here, according to our current settings. But you see that our stop loss was actually taken out earlier. So that means that in the settings, and we go to risk management general, we see that our max stop loss was allowed to be 15 handles. But if we would change this to 30, we already see that this trade would have been successful if our max stop loss was changed. So let's have a look on what actually happens in bar replay once we move our stop loss. So let's go back to the settings. So the previous settings were a stop loss of 15 handles instead of 30, and we see that our stop loss was placed over here and that we were taken out. So we move along, stop loss was placed over there, we get taken out. To fix this, what I already showed, we go to the risk management general settings and we just change our max stop loss to 30 because we know that the initial stop loss placements was correct, but just the max stop loss was preventing it from it being a successful trade. So the entire stop loss is now allowed to be 30 handles, and the stop loss should have been 27.75 handles. So instead of 30, we can actually use 27.75, and then it should still be okay. There we go, it's still okay. If we had changed our max stop loss to, for example, 25, you will see that it will be put over here, because what does this max stop loss setting do? It makes sure that the stop loss is never greater than the number you put in here. For example, if I would place it at 10 handles, you will see that it will be 10 handles away from our entry. We will get stopped out, and we don't want that. So let's keep it back to, let's put it at 25, because at 25 handles we were still okay, right? So to make this trade a successful trade, the only thing we had to do was change the max amount of stop loss that we had. And we see that this losing trade now turned into a winning trade. And if you remember the strategy tester, where we first had 5 losing trades, we now see that we actually have a winning trade. So that is how the first small change of tweaking your own model, tweaking losing trades into winning trades, can be done. So now let's look at another example. So we now see that we had one losing trade here and we had a winning trade over here. So let's go to the next losing trade, which was this one. And let's have a small look on what might be the issue over here. So we go back into bar replay. We see that we were stopped out due to some reason that we are unaware of yet. So this would have been the whole trade. Let's go one bar back, because then we can see our profit target. So the initial trade would have been with an entry over here to the first profit target over here, which is a nice trade, you would say, because we can take 40 handles of profit, 40 handles on NASDAQ, 40 handles times 20 would be $800, right? And now we had a losing trade with just 14.5 handles. So when we inspect this trade, we see like, with the previous change that we made, we changed our max stop loss to 25. We see that our stop loss of 25 handles was not exceeded because we have a stop loss of 14.5 handles, correct? But we see that with this entry, our stop loss placement was placed on the fair value gap low or high with the initial settings that we had. Here you can see that. We also have two different settings. Fair value gap low high, which would place the stop loss here or here. But we have also the candle low high, which is here and here. And we see that if we had placed our stop loss on this candle low instead of the fair value gap candle high low, that this trade would have been successful. So to make this losing trade into a winning trade, we know we do not have to adapt the max stop loss, but we know that our stop loss placement should be changed. So let's place it to candle low high. And now we see that instead of getting taken out over here, we get taken out over here. And let's see why that is. So we see that with the new change, our stop loss got placed here instead of over here. So now we have the same situation as that we had before, right? With the previous trade example. Our trade stop loss, our max stop loss, is preventing us from having a stop loss placement over here on the low of the actual initial fair value gap creation candle. So to make this trade into a winning trade, we know that we should adapt again our max stop loss, because our stop loss was capped at 25 handles, which literally just takes us out just because of that. So if we would, for example, set it to 26 handles, we are safe. So, and what happens now is that this losing trade also got turned into a winning trade and then got stopped out on break even. So instead of having 5 losing trades, now what we have is 4 winning trades and 1 losing trade here at the beginning. So we already, just by looking at the trades, how they set up and how the stop loss placement was initially, we already went from a minus $1,600 to plus $1,600 with small changes that we made. And we have a profit factor, a risk reward ratio of 3 to 1. Which means that whenever we lose $1, we make $3 on the next trade, with a winning percentage of 80%. Now let's see if we can actually change this losing trade as well. Because if we change this one, we know that we have a 100% win rate over the trades that were visible on our screen. And we already see, when we look at this particular trade, this losing trade, that no matter what happens, whatever stop loss placement we create, we will never be able to take a win out of this trade. So we should look at something different. We actually want to prevent taking this particular trade. So let's see what we can actually do about that. So we see that with the default settings, this is a valid fair value gap to trade because it is, let's see how many handles. It is 6 handles. So what we could do to prevent this particular trade is potentially there are very many different ways that we can adapt the script for preventing this trade. For example, what you also could do is using multiple liquidity lines. Do not trade on this particular day, first day. So for example, if we check the do not trade first day mark, we prevent this trade, which would also result in us having only winning trades, but we filtered out another winning trade as well, what we do not want. So is there another way that we can prevent this actual trade? And what you could do, for example, in this particular trade is, all right, we see that our bias changed on this particular candle. So a way to prevent this trade is to actually check this particular option, cancel limit order on changing bias. So the bias changed, which means that we prevent this particular trade with, and we keep all our previous existing trades. But we see that a different loss occurred over here now due to that change. and that this winning trade that we previously had now turned into a loss. So we don't want that either. So let's go back to this setting. We know that those particular risk management strategies, we should not use those. So maybe what we could do is enhance the fair value gap size to make sure that we do not trade these kinds of trades with a fair value gap size of 6. So we go to our strategy settings. We see that our minimum fair value gap size is now at 5. Let's put it to 6. Was that enough? Is that the actual size of the fair value gap? It's not. Maybe it's 6.25. Okay, there we go. So right now, with putting our minimum fair value gap requirement at 6.25 handles, this trade has become, this fair value gap trade, has become invalid. Let's see what the results of that are. Huh. This is way better. So right now, we do not have got any drawdown. We only have got wins. So this would be a valid trade or model to be using with using 6.25 handles. But are there any other ways that we could keep all these trades and prevent this trade? Well, one way, what we could do is look at the time of the trade actually placed. So we know that we entered here on 10:52. Let's see the entry on the other trades on what time that is. So we know that the winning trade for this trade was placed at 10:39. This winning trade was placed on 9:55. And that our losing trade was placed on 10:52. So to keep all these winning trades and only remove this particular trade, what we could do is just change our trading times. So right now we trade from 9:50 to 11:30. But if we would stop trading at 10:50, that means that we actually would keep all our winning trades and filter out the losing trade. So let's put our stop trading hours to 11:50, to 10:50, I mean. And by that way, we filtered out this trade, but kept all our other trades. So with looking at how losing trades are formed, and without changing our value gap requirements, which would filter out those winning trades as well, we now kept all the winning trades and filtered out the losing trades by just changing our trading times. And what you see here is that with just this particular change, we just trade the silver bullet AM session of ICT. Interesting, right? So that is how you would go about tweaking your model and filtering out the bad trades versus the good trades. So based on time and price, so the time of trading and price in regards to stop loss placement, we were able to have a 100% win rate right now compared to a 100% losing rate. So that's how you can tweak your settings. So go to your strategy tester, go into the overview and see what the losing trades and winning trades have in common. Change your settings, your stop loss placement, your time trading settings according to that. All right, my headset disconnected, but according to that, you are able to create a profitable model with the times that you are able to trade and the price on the charts. So let's say, for example, that you are only able to trade the silver bullet hour, so you are only able to be there for 1 hour a day. This would be ideal. But if you are only able to trade, for example, between 7 and 8, it's very simple. You just set your stop liquidity trading hours to 8, so 8, and you are allowed trading hours to 7. And we see that we do not have got any trades right now with these settings from the past 28 days. But once you start fiddling around with, all right, let's say that our liquidity can also be calculated every 30 minutes. Okay, we don't have any trades now. Calculate every 15 minutes. Also doesn't generate any trades. All right, let's see. What else can we change? All right, let's just remove the custom bias. Also no trades. Weekly bias, also no trades, I think. Daily bias, also no trades. Use midnight, also no trades. Okay, we see that we do not have got any trades in the past 28 days using these settings. But to see if we have trades before that, we can use the deep backtesting function. We let it calculate. This takes some time, but that's totally okay. And once this is calculated, we actually see that of the past 2 years, there were any valid trades based with the current settings we have on right now. It is possible that there aren't any trades and that just isn't a viable model. But the essentials from this particular tutorial is figure out the trading times that fit your needs, play around with the settings, and start filtering out what are characteristics of the good trades, the winning trades, and the characteristics of the losing trades. And by that, you will be able to create a model that is unique to your trading style, that is unique to your trading style, to your time and price element, and that's how you should be tweaking initially for at least the first week or perhaps 2-3 weeks to figure something out that works for you in regards to equity drawdown and profit margin. So what you see with these settings that we have right now to trade between 7 and 8, we see that we have this particular results. What you now could do is go into the list of trades and see, all right, when is my first losing trade? It was on October the 8th. So what we could do then is go on bar replay, select date, we go to 2024, and then October the 8th on 7/27. Let's see. All right, I think I did something wrong with my date settings. Yes, I did. October the 8th. There we go. Oh, this is November. My bad. October the 8th, 7/27. All right, we had a losing trade over here. We were entered, and then we get stopped out, right? So a characteristic of this is we got, for example, entered on 7/27. Maybe we don't want that. So maybe we should change our trading times to 7:30. So we only trade a half an hour instead of trading that full hour. And then we potentially see in our deep backtesting settings that instead of losing that one particular trade, what will happen on the historical bars when we only trade these 30 minutes, and that's how you will tweak. So it's just rinse and repeat over changing a particular settings, go into the trades, figure out what's wrong with them, figure out what's good with them, and find similarities in those particular trades to create a profitable model. And if you finally figure out what a profitable model is for you, then for example, you get to something like this. If it is loading. This is my M&Q model, and you see that without the deep backtesting feature, already we have 25 trades over the past 20 days, and we had a 100% win rate with it. And I actually streamed all of these trades in the Discord live. I think I've also placed the YouTube videos on these. So that is how you should start tweaking your scripts to your own needs. For example, I can trade these particular trading times. And yeah, that's it. So I hope you learned something from this on how you should start tweaking the model from the default settings to fit your own time and price unique model with ICT concepts that are integrated in the MW Futures Liquidity Scalper. So if you've got any questions, feel free to leave a comment in the description, in the comment section below, or ask it in the Discord, and I will be gladly to help you out. Perhaps even another user is able to help you out. But this is how you should start when you first get access to the script and just start tweaking, start playing around with it, and you will actually figure out that it is kind of addictive to actually dive deep into price action and figure out, all right, do I understand how this works? How should I adapt to it? And once you finally find a model that gives you a very good result, you will know that once you get that alert of take a trade now, you know that that will be a winner. And that's what you should start to aim for. Create a model, figure out how reliable it is, and start trading it every time you see a signal being provided. So thank you for your time, and I'll talk to you next time. Bye bye.
In the morning light, markets take a flight. Nasdaq opens tight, only 30 feels so right. Liquidity's the